Hello and welcome to our webinar. My name is Allison eAsset and I'll be hosting our event today. Before we get started, I'd like to take a moment and just address a few housekeeping issues. First, today's event will be just about 60 minutes. 45 minutes will be reserved for our presentation, and the last 15 minutes will be dedicated towards answering audience questions. Second, you'll notice there's a chat feature within WebEx. If during the presentation you have a question, you may use the chat window to direct those questions towards me, and I'll be facilitating them to our panelists at the end of the presentation. Lastly, today's session will be recorded, and we will be distributing it after the webinar. So let's get started. Presenting beyond paper, the benefits of taking the vehicle loan process digital. Here's a brief overview of today's session agenda. First, our presenters will be giving a brief synopsis of the industry, where we are now, where we're headed. We'll then kick it over to eOriginal and hear how they've been helping organizations manage assets post-signature and why it's so important to gain trust and acceptance from third parties. Then, Byrider will provide a brief company introduction and jump into detail around their digital transition and a quick result summary of their organization. And we'll end with our Q&A session. And now I'd like to take a moment and introduce today's presenters. We have Theodore Papiliou, Director of Value Engineering at eOriginal, and our special guest today, Mike Onda, Director of Strategic Initiatives at Byrider. Thank you both for being with us today.
Thank you, Allison.
Thanks, Allison. Happy to be here.
Let's jump into our industry overview. Theodore, what's your take on current pain points in the vehicle financing sector? What are some, problems organizations are coming across today?
Certainly, Allison. We've been in this industry for over a decade now, across multiple industries for that matter, and but specifically in the auto industry, we're seeing a lot of issues in relation in the paper world to errors and omissions on documents, missing signatures, missing initials, or the information on the contract itself has been modified and don't qualify or meet the parameters that they were originally underwritten on. So this causes a lot of back and forth with the paper and really increasing the cost of that loan during that process via FedExing back and forth. We also, as pointed out, the mailing costs that occur, having to get the original wet ink document from the dealer's location to the original funder, and subsequently in that flow of the notes and cash back to custodians or investors of those notes, whether it's securitized or collateralized. Review and verification is a big effort as well, whether it is happening once the contract arrives to the funder to ensure that what's on the contracts themselves is a fully executed contract, but also as it moves through these processes that we talked about and changes hands, every step of that requires some sort of form of verification. And because of the fact that it's paper and in the desire to have perfection and possession of these documents, there's a long funding cycle that in many cases is caused because of the time it takes to transfer these documents.
Great, thank you. And Mike, what about you? Are you seeing or experiencing different pain points in addition to what Theodore stated within the industry?
Yeah, I'll highlight three that I think many of us on the phone would agree are current pain points in the industry. The first one is for a few years now, we've seen falling collateral values on the wholesale market. And unfortunately, what that means is when losses do occur, the severity of the losses increase when you can't get as money or you can't recoup as much money on the back end selling the vehicles. So that one's a challenge. Secondly, we've seen higher funding costs, especially recently in the ABS securitization markets. This is a critical source of funding for many of us in the industry. And as spreads begin to widen, that just puts additional pressure on earnings and net income at the end of the day. And then finally, increased regulatory scrutiny. I think we could all agree that consumer protection is a shared value and is critical to build trust with our consumers, but just takes dedicated resources and a constant focus above and beyond running the business day to day. Those are the three things I think we can all agree are current pain points in the industry.
Well, there seems like there's definitely room for improvement. How about industry trends? Theodore, have you seen anything particular?
Yeah, so this has been going on for some time, actually. Electronic signatures and digital transaction management has been available and evolving for since the early 2000s when the laws were enacted to support them. But some of the key drivers that really in the last 5 to 6 years have forced the adoption in this space is the millennials. We are seeing a growing trend, or not trend, but a growing of that particular group in the industry. They are maturing and entering the workforce and have funds that they are now leveraging. We also just recently, I saw a statistic that they have now exceeded the baby boomers in the workforce. So they come to the market with a very different perception of how they want to interact and the experience they want to have, especially when dealing and interacting with large sums of money. So that is changing the way, obviously, that originators, in this case the dealers, are responding to attract those groups. We also are seeing a trend in the fintech industry. They have started out in unsecured loans, but as they have become popular and have found their niche in the space and their audience, they're expanding into other classes of assets, not just unsecured loans, but mortgages, equipment leasing, and automotive. So we're seeing now from the fintechs that they are starting to introduce loans for the auto industry, and we're also seeing startups that are specifically targeting the auto industry in hopes of improving that process and targeting the millennial audience. Finally, we see regulation, as Mike mentioned. It is pretty evident that regulation is here and is going to be more pervasive in our day-to-day, and so these are things that are driving our customers to adopt DTM.
Great, thank you. Mike, you spend a lot of time researching industry trends as well. What are you seeing as developments that are different from, say, 5 years ago?
Well, the first one actually probably has been around for about 5 years at this point. I mean, as we all know, the market is cyclical, and we're at a point in the market where cost of capital is very low, interest rates are low, so there's more financing options. There's just more players in the market willing to lend money and to secure automobiles. Now, what's different is that it's been longer than in the past, so this has been playing out for quite some time and continues to be something that we all face. And the second thing, and Theodore mentioned this with the millennials, but I think it goes even beyond that particular generation. I mean, there's just an evolving customer expectation for how they make purchases. I know personally, my family buys probably 90% of the things online these days. And I think people look for that sort of expectation even with other things that they purchase, like automobiles. They want it to be easier, they want it to be faster, and they want more options. And so that's going to be a continuing trend, I think, in the auto space. And then finally, looking forward a bit, the rise of non-traditional transportation, ride-sharing services like Uber and Lyft. I mean, folks are going to continue to have more and more options than just buying an automobile or riding public transportation. So we need to make sure we stay ahead of the curve as retailers and financiers.
Great, thank you. So moving on and building off of what Mike said, Theodore, can you talk to us a little bit about the digital wave and where we are now? Yes.
As mentioned earlier, this has been going on for at least a decade, if not more. But we've reached that point now in 2015 where there's been a lot of adopters that have successfully implemented digital transaction management from origination, execution of the documents to securitization, collateralization of those assets. So this is a great time to jump on board because it's not a new technology. It's been proven. We have many customers that are doing this today. There's a lot of value that we've identified with our customers and through the different verticals that we're in. There's a lot of expectations from consumers that is being addressed with this technology, and so we're seeing that the customers of ours that have implemented this and have gone through the initial phases and are now fine-tuning that process are seeing great levels of efficiencies and adoption acceptance from their consumers in this industry. Very quickly, I wanted to cover the solution that we're offering. eOriginal solution provides an end-to-end digital transaction management offering from execution of the contracts themselves through the life cycle of the assets post-execution. The ability to leverage any device in any location to execute a loan is key in today's market. Whether you're doing it in the dealership showroom on a dealer's device or bring your own device, or you have multiple signers and co-borrowers that are in different locations, this solution enables the execution of the complete loan to happen very quickly. But once that's executed, what is very important to the funders in the back end is to be able to ensure that that executed contract is the original, is the only one, that they can show first security interest against that asset. So our system enables and ensures that that executed contract is an authoritative copy. We subsequently, in compliance, in this case, eChattel with UCC 9-105, meet the 6 criteria and ensure that the vault itself, the storage of the contract, shows the chain of custody, ensures that the person that has control of that has that control as needed, and that they can prove and show every activity that has happened to that asset during its life cycle. There are a lot of functions that are required against these deal jackets post-execution from a maintenance perspective, and our solution provides a lot of the functionality to enable the management of the documents, even to providing evidentiary packages for legal purposes. And finally, and a huge differentiator from any other system out there, is we have the functionality and the execution capability of transferring these assets in pools to various participants in the process, ensuring that that control is being transferred along with it. And this has been done many times by our customers and, again, proven by the rating agencies. Finally, we can capture a lot of data associated in the decisioning process as metadata associated to the documents that enable rapid analysis, a review of the portfolio in the pool, as well as auditing it, whether it's internal or external. A lot of the adoption started with the originators. So we saw the dealers were very keen on providing electronic signatures, but as that was booming, the funders realized that they needed to have some control and dictate how that was done and making sure that it was done correctly to ensure their ability to perfect. So they approached us in many cases to understand how we can ensure their first security interest in the asset, and now are leveraging and implementing our solutions and pushing that back forward. There's a lot of efficiencies throughout the life cycle of the asset. From a value engineering perspective, we've talked with a lot of originators, and we're seeing extreme ROIs in the tune of 800 to 1,000% ROI just in the execution portion of it. But there's a significant ROI post-execution as well. Leveraging existing technologies that are in place today is key to the adoption rate. A dealer doesn't have to necessarily go out and retool their showroom floor. There's a lot of cool capability if you were to introduce a tablet, but this can be done on any computer that has internet access. So the adoption can happen very quickly, and we've seen that in most cases. Our customers are seeing up to 90+% adoption within 6 months of the solution. So the importance of acceptance, of course, is can you get the same rating as paper? And we alluded to this. We have all the major rating agencies have reviewed our product and have given parity rating to our electronic portfolios and our solution. We've seen investors do major reviews and getting legal opinions against our solution. We've met all those requirements, as well as many custodians, including the large U.S. banks, have adopted our technology to be able to accept the special purpose vehicles, special purpose entities under their custodian control. Very quickly, and most of you are probably familiar with the process itself, but pointing out how our solution is capable to provide an end-to-end solution from the origination of the document at the dealership and being able to execute a deal jacket, review and underwrite the decision, the notes themselves, the contracts, and have them executed immediately on the showroom floor, and moving those temporarily into the dealer's vault, and then subsequently moving it into the funder's vault in the back end, ensuring that there's a chain of custody, of ownership throughout the life cycle of these documents. Obviously, funders, depending on their position in the marketplace, may opt to securitize or collateralize these assets by leveraging larger pools of funds from larger financial institutions. To do that, they obviously need to move the control of those assets, and that, again, is supported through our solution and provides the necessary tools for the two parties to agree on the value of those assets that they are being funded and moving the assets control to the legal entity that wants to receive them. Loan segmentation can be supported, so being able to review and assess the various loans values in tranches, and finally creating those special purpose vehicles. Again, all of that is supported with the eOriginal solution. I'd like to move on now and ask Mike to provide some insight on their solution. Some of the questions that we think would be of interest to our customers and the prospects on this call is, what led your organization to this change in implementing DTM? What were the barriers that you came across while identifying solutions out in the market, and also post-acquisition implementation? Did you identify scalability issues or compliance issues that you felt could be addressed or may not have been addressed, for that matter? The results and benefits you're seeing, and obviously, insight of what you've learned going through this process for the audience that may be looking into doing this.
Great, thanks, Theodore. First, let me give you guys a bit about JD Byrider and who we are. We're a vertically integrated business. We sell, finance, and service vehicles in-house, and we've been doing it for more than 25 years. We've sold more than 1 million vehicles through 169 locations. It's critical to understand 28 of those locations are company or corporate owned, and the rest, 141, are franchise locations. And we're private equity backed and growing rapidly. So those 28 company-owned locations, 5 years ago, it was half that many, and 5 years from today, we expect it to be to double what it is today. So that's the path we're on, and that's a bit of the context for what we're going to talk about moving forward. So next slide, our transition to e-contracting. There we go. So a couple of things. One, I mentioned earlier with some of the pain points and the trends in the industry that our earnings are being squeezed in a few different ways. So something that we constantly do is look for ways to leverage technology to increase our efficiency across the business. And electronic contracting is a perfect example of that, and I'll tell you a little more in a bit. But the other reason we contacted eOriginal is because we are growing so quickly, and because we were a chain of 14 locations not long ago, and now we're at 28, and we're going to be 50 plus before too long. There are some new challenges that come along with that: scalability, but also additional regulatory scrutiny. Once you start selling 10, 20,000 vehicles a year, you get a little more attention from some folks. So it's critical for us to have consistency and accuracy across location and across contracts. And that was a big driver of what we did here. Also, more efficient document control on the back end. Many of the things Theodore mentioned earlier, and we can speak to more specifics about later on. And then finally, anytime we're looking to do something as a business, we ask not only is it good for JD Byrider, but will it be good for our customers as well? And the answer is definitely yes with electronic contracting. It's just a better customer experience, and I'll tell you a little more about that as we move forward. So what did it take to implement? First of all, we integrated eOriginal with our homegrown DMS, our dealer management system. That was critical. They speak back and forth via web services and API and work together to complement each other. We developed a custom hardware solution that we rolled out to all of our different dealerships. And if you could picture it, what we've actually done is we've created dedicated finance stations, multiple per dealership. And what these are, they're large touchscreen all-in-one computers that act a lot like a smartphone. The customer or our underwriter can use their fingers to zoom, to scroll, etc., and to see the documents and to sign the documents right there. It's a really exciting and powerful solution that we've developed. Some of the other critical things we needed to do to implement was to secure legal opinion from our outside counsel. You obviously have to be in compliance with a number of federal and state regulations, but ultimately you also have to convince the banks and others that the e-contracts will be enforceable. And with eOriginal as your partner, it'll be a lot easier to do that than with some of the other folks we looked at in the marketplace. We had to update some banking agreements, not only our warehouse agreement, our custodial agreement, but also our master electronic control agreement. So a good amount of work done not only with banks but lawyers to make sure we had dotted all our I's and crossed all our T's as we were building the electronic solution as well. And then finally, we had to train folks across locations. We've got 28 dealerships. We've got over 100 underwriters today. We built a really user-friendly platform, both with eOriginal but also with the hardware. So we did it over about 3 waves of stores, and we did it over about 2.5 months, and we were up and running with all of our locations. So now I'm sure you all want to hear a little bit about some of the results and what we perceive are the benefits. First of all, we rolled out our final stores earlier this year in the month of January, and as of May, 98% of all of our contracts were signed electronically. And the few that weren't signed electronically weren't because the customer didn't want it to be electronic. It was just because we were selling too many cars at one time and didn't have enough dedicated stations, actually. So it was a good issue to have. What we hear from our customers is that it is a cool process and it's a lot easier than signing paper documents. And I don't know about any of you, but I've signed obviously wet contracts, but I've also signed electronically, and it's a real differentiator. You feel good about it afterwards, and that's important to us. And then there's real savings. There's a real ROI here. Theodore mentioned less printing, scanning, and mailing. Obviously, from the dealership back to the corporate office, then to our different lenders. That was a lot of FedEx that we avoid at this time. It's all done seamlessly through the eOriginal vaulting. Reduction in time and energy spent ensuring signatures are present and accurate. I'm sure you all go through this today. There's an audit process to make sure all the signatures not only are accounted for, but that they match the printed name on the contract. So is there a suffix, a junior, a senior? Is there a middle initial? Is the first name the full first name or a shortened first name? All of that goes out the window when you move to electronic signatures, and that's huge for us. And then reduction in the time and energy spent transferring the contracts. Again, Theodore mentioned that we're able to essentially batch transfer hundreds of documents, hundreds of contracts at a time, all at once, seamlessly to our lenders, and that's just a game changer for us as a company. So we've only been doing this for a few months now, I mentioned, so I can't share with you specifics as to whether it's a 20% ROI, 100%, or 500%, but it is real and it's growing as we continue to improve and optimize the process. The last slide I'm going, or excuse me, last one slide I'm going to present before we move on to having a more interactive conversation is just some insight I would share with any of you considering electronic contracting. You know, the first is that I truly believe it's only a matter of time until customers expect to sign electronically. I personally bought a new house about a year ago. 2 years ago, I began signing different things electronically, so when they put a stack of 50 to 75 pieces of paper in front of me and a pen, it was frustrating. I mean, we've moved far enough with the technology that I expect electronic contracting, and I think our customers do and will as well. The next thing I'll share is it took us six months to build and to implement the electronic contracting, but upkeep has been minimal, if at all. I mean, these days I don't spend any time worrying about electronic signature and contracting. I get my reports, I see it's working well, and I go about my day. So that's huge for us. And then finally, as I mentioned or alluded to earlier, eOriginal is recognized not only by our lawyers and the banking institutions as an expert in this area, but as a truly differentiated solution. When I began looking at different vendors, what I learned quickly is that the electronic signature piece is truly a commodity. You can get that from lots of different people, but the asset management and being able to get sign-off from regulatory agencies, from the banks and from your lenders, eOriginal is one of the only, if not only, game in town that they recognize that they're working with today and that you can move through the process quickly, easily. And it's because they've got such a great solution and one that we rely on critically to run our business. So those are all of our formal slides. I know Theodore are really interested in answering any questions you might have. So at this point, I'm going to pass it back to Allison to moderate those questions.
Great. Thank you both so much. You went through that a lot faster than I thought, but luckily we have a bunch of questions coming in. So I am going to get started. This one looks like it's for you, Mike. It says, did you have to contend with multiple state-specific laws, and how well did your solution address that if it was something you had to deal with?
Yeah, so that's a great question. Many of the state-specific laws have to do with different forms for selling of the vehicle. And many of the vehicle-related forms, we continue to use paper forms for those. Many of them are notarized. Others, the different state agencies only accept paper documents at this time. So our retail installment contract and all of our bank forms are electronic. So I think that's really the only state-specific issue that we ran into.
Great, thank you. Here's another one. I guess, Theodore, you can address it, and Mike, you can hop in on it if you want. But we're not a cutting-edge technology company, so how hard was it to implement the solution? Oh, that's for Mike, I guess. Go ahead, Mike.
Well, what we did was we had a cross-functional team that worked hand-in-hand throughout the process. That obviously included folks from our IT department. We have a pretty sophisticated IT department, but we're not a huge company and we don't have unlimited resources. So I think we faced probably many of the challenges you would face as well. And I think they would tell you that eOriginal had a pretty sophisticated API and web services solution that lets you pass information back and forth, whether you're using an off-the-shelf dealer management system or something homegrown. Their technical experts and engineers were there right from the beginning with us to answer any questions we had. They had dedicated resources to work with us. They answered any and all of our questions. We didn't run into any major obstacles when it came to integrating the technologies, and I expect you would have a similar situation.
This is Theodore. Allison, I'd like to add to this in dealing with a lot of different funders, especially in the independent space where they don't have a lot of control over the dealers and what they have on their end. So I mentioned it earlier on, and we're seeing this kind of hybrid adoption from our customers where they, in some cases, are proactively providing hardware equipment for the dealers to have. This is a very obviously nice to have, cool, as Mike mentioned, a feature to be able to sign on a tablet. But we're also seeing that independent dealers that may still have an old desktop computer are able to adopt this technology, leveraging that itself. And we're seeing, you know, the dealership, and I've actually spent time in my value engineering capacity walking through processes with independent dealers. They have old fax machines and they have old spool-fed printers that they're still using, and they're able with the solution now to eliminate the need for those and just focus on the desktop. The other common technologies kind of come through this space that I still see is the signature pads. So those are being leveraged as well in early adopters who didn't have a lot of options in the beginning. But that, too, is starting to fade away considering the cost of that device in comparison to a tablet that you can buy probably for a quarter of that price. So it is definitely an approachable and feasible technology to adapt.
Great. Let's read another one. We've talked about doing this, but we don't want to be the first, and we still are concerned about the legality of it. How did JD Byrider justify this? How does eOriginal address these concerns?
Well, I can speak for us and then hand it to Theodore. We have highly qualified and very experienced outside counsel who had worked with others in our exact space that had already adopted electronic contracting. So we were able to ride in their wake a little bit to that degree. What we were required to do was to outline in very specific detail our end-to-end process. And obviously we had to meet some very specific regulatory requirements. So just to give you a few examples, we have to make it clear in our process, and we do that in a number of ways, that this is an optional process for our customers. We can and will conduct a paper closing if they prefer. Again, I mentioned no one does request that, but we've got that as an option. We also had very specific terms and conditions when we begin the electronic contracting process that we have on recording. They read, they ask any questions they have, and again, they can choose to go back to the paper version at that time if they'd like to. Finally, just another piece of our process that is critical is, you know, a regulatory disclosure requirement is to provide a hard copy of the truth in lending, the different TILA items from your retail installment contract. So while we have our retail installment contract signed electronically, we do print the first page, which has all the TILA disclosures, and we give that to the customers. Those were just some examples that outside counsel helped us to ensure we had as a part of our process to make sure that it passed regulatory scrutiny.
Great, thanks, Mike. From eOriginal's perspective, you know, this is pretty much our bread and butter. Our organization was established by an attorney, Stephen Bisbee, who was involved in the creation and writings of the various laws that encompass the space, specifically in e-sign law, UEDA, and the UCC amendments around electronic chattel. So we've taken a lot of effort to ensure that we meet those requirements to the fullest extent. But beyond that, I think time and time again, as Mike alluded to, their process in vetting us, we've had many organizations have outside and inside legal counsel provide a legal opinion. And that's a pretty involved process. It's not just a review of our website or our documentation. It involves our legal counsel and other parties' legal counsels to spend a lot of time together reviewing the processes, reviewing the technology, lining them up with the various components in the laws and agreeing that those components meet the law as it's defined. So as an organization that's been doing this since 1996, and really the technology taking off since at least the mid-2000s, we've gone through a lot of these processes and feel confident that we provide that in certainty related to the legality. But more importantly, you know, during the 2008 timeframe, we saw through monitoring our solutions and talking with our customers specifically in the auto industry where there's a lot of defaults on auto loans that our customers were leveraging in the tens of thousands of events, the evidentiary package that we talked about from our system and providing them to court. And we have not received any complaint from our customers in that process, which is a good indication. Finally, just an anecdotal, talking to a legal counsel or an attorney for one of our customers, they mentioned to me that since they implemented digital transaction management, that their legal process when someone questions the legality of a contract or whether they are bound by that contract, that process and the cost to defend it has gone significantly down due to the fact of providing this evidentiary package to the courts, and immediately the suit is dropped or the complaint is dropped because it's such a detailed track of what has happened during the execution of the documents.
Great, well, thank you. We had another one come in around using red ink on contract in certain states. We believe there are 4 of them: California, Alabama, Michigan are 3. We are worried about requiring our dealers to invest in and maintain color printers. Theodore, do you want to address that?
Yeah, I'll go ahead and catch that. I'm familiar, and full disclosure here, I'm not an attorney, but I am familiar with California having a color and font requirement. The nice thing about our solution is that is configurable, and it can be configurable per type of transaction. So being able to identify that it is a contract being executed in the state of California, the solution can, based on the configuration you've done, can execute within the parameters of that particular law. I'm not familiar with the other states that have that requirement. I'd have to talk to our legal counsels to identify that.
Great, well, thank you. A couple more here, bear with us. Our dealers are not, oh, we already did that one, sorry. Our investors probably won't take eChattel for collateral. How common is that?
I'll start with this, and then Mike, I'd love to hear what you guys are doing on your end as well. As I mentioned, we have a lot of customers in the auto industry. Actually, it's probably our strongest vertical that we're in right now. We've had customers as early as the 2006-2007 time frame securitizing assets in the market and maintaining it electronically through the life cycle. But not just in the auto industry. This is home security, equipment financing, even in unsecured loans. We are seeing securitizations happening all the time. And an interesting thing from our perspective, obviously, the experience that we hope our customers have was it's not just a technology transaction. We spend a lot of time in this industry understanding it and being subject matter experts around the whole process. So we provide a lot of best practices around this. And part of our process, we go out intentionally and tell our prospects, we need to include in this loop your legal counsel. We need to include the various funding sources that you might be leveraging and prepare them to accept it if they're not already. The interesting thing with that is more frequently than not now, we're running into the same players in the back end that we've already convinced that they can to accept electronic chattel, and so this is becoming an easier and easier process. Going back to the wave slide that we had, once again, this is a great indication of why the timing is right. Jumping on board right now, the barriers to market that existed as early as just a year ago has dramatically and significantly changed in the acceptance and the hurdles that you have to go through. Mike, have you guys gone through that process?
Yeah, well, I'll say a couple of things about it. We work with some folks that I'm sure you've heard of, and I know that they accept the eChattel, so Wells Fargo, Deutsche Bank, BMO. One of the reasons, again, that we went with eOriginal and we're confident with moving to the solution is that some of the other larger players in our space who happen to share those same banks had already adopted it and already gone through some of that hard work. So we didn't run into too many issues there. But what I will say is that we did engage eOriginal to work with us, with both outside counsel as well as the banks when we needed some additional support. They've been in this business for a long time. They are experts in telling their story, and they were a great partner throughout. So I think you'll find that as well.
Great, thank you. So it looks like we've got one more, and this is, how does this process address regulator disclosure issues?
Mike, you want to jump on that?
I mean, I'm not sure that this is the exact answer that the questioner is looking for, but one of the most important things we had to build into our process in terms of disclosures was the truth in lending requirement to give an actual hard copy of the interest rate, et cetera, to the customer, so that if they want to, they could take it to a competitor or take it home with them. That is the only thing we had to account for, I believe, moving from paper to digital. And as I mentioned, essentially all we do is we print the first page of our retail installment contract. We hand it to the customer. They can take it with them, but they still sign the retail installment contract electronically.
That's great. Obviously, coming from the vendor side, is a little bit of different perspective to add on here. The solution itself provides a lot of capabilities internally that ensure and help the auditing and around compliance. For what Mike just talked about, that is part of the deal jacket and execution. But other documents that you may not be able to provide and execute electronically can be attached and associated to the deal jacket post-execution. So the system supports that if you wanted to include documentation that better explains the situation under which the underwriting was taken and the execution of the contract was taken as evidentiary documentation. But with the introduction of a new capability called Datalytics, we also are looking to enable our customers to start doing proactively auditing of their portfolios. While we can't, because of where we are in the process of the sales of a car, we can't necessarily impact or change what the CFPB specifically might be looking at upstream and downstream from us, and specifically they seem to be focusing today on the marketing tactics and also the collections tactics. Like I said, we can't necessarily influence those, but what we can provide for the organization is insight to what may have happened during that time and the ability to look at the details and identify activities that may be occurring unbeknownst to them in the process, possibly by individuals that are not following the proper rules. So having the ability to capture a lot of that data and associate it with the document, the deal jacket itself, and being able to provide the same level of certainty of what's in the document to what the data was at the time the decisions were made, provides great insight for the internal auditors. And even if external auditors wanted to review, they could come in and drill down in the data, see high-level dashboards with defined key performance indicators to glean what the overall performance is of the portfolio. So we think that's a great new addition. We've also, in our role in the space, we've had conversations with the CFPB, and they've been very positive about the notion and the idea that they might be able to review portfolios remotely without coming on site and demanding all the paper being brought into your boardroom. So hopefully that could be a reality someday.
Great. Well, Mike and Theodore, thank you guys so much for being with us today. And to our audience, we wrapped up a little early, but again, we'll have the recording. And if you have any questions for eOriginal, please reach out to Brian Kelly, our Vice President of Business Development. Once again, thank you all. Have a lovely day. That concludes our presentation.